Welcome back to Midcap Radar. Well, the bank on our radar today is Federal Bank. The stock is reacting to its Q4 earnings. Their net interest margin has improved, slippages are down, while asset quality is relatively stable. Shyam Srinivasan, the MD and CEO at Federal Bank, joins us now to talk more on the Q4 performance and the business development. Good afternoon, sir. First of all, thank you so much for joining us. Before we get to Q4, and before we get to the FY25 outlook, so, we are awaiting one important clarification from your end. So first up, earlier yesterday, we did see that we saw a significant exit at Koatak Mahindra Bank of Mr. Manian. Is he part of the list of candidates that you had proposed to RBI earlier this year? Was he part of the list of 3 that you had proposed? Has there been any discussions at that end? Could you give us any clarity?
Thank you. I thought it was a results call. Firstly, about the results, you did point out, I think it was our strongest, operationally very strong quarter. In particular to your question, I did mention, right, in our earlier interactions, we've mentioned that the board has set up a search panel that's going through its process. I'm sure, be sure when the regulatory approvals come in, it will be first flashing on your screen. So beyond that, it's hard for me to even make any comment because the process is in an advanced stage, but underway. So beyond that, really no comments. It'd be inappropriate to make any statements.
No, Mr. Srinivasan, we get that. It's just that we wanted to understand, is that update going to come out soon? Do we expect that in next few days or earlier than that? And if you can't give us a sure answer, is this someone from outside the bank or is this someone from internally from the bank? If you can give us a sense of that.
Sonal, you can question me many times over. The answer is the same. The regulatory process is underway. The search panel is doing its job and doing it very well. All I know is they have a rich slate of candidates. We did say that we have both internal and external candidates to choose from, and the process is underway. Honestly, beyond that, everything that is being talked about is absolutely in the speculation zone.
Because we are also asking that because there was also an update that along with results, the board will take up other important matters as well. So is it one of the matters that will be taken up?
I was curious to understand who gave these sources this information and why these misguided. You guys should not carry stuff that is not in the exchange. That's my humble advice.
No, I think it is on the exchanges that it's just not results. It's other matters as well that will be taken up.
No. In our results, it very explicitly states, kindly look at it. The board considers results and dividend declaration, recommendation for dividend. Both of that has been done. The board is completed.
So one question before we move on. So would you be able to clarify whether Mr. KVS Manian was one of the probable candidates for the MD and CEO? Is that something you'd be able to answer in black and white?
Very good question, Vivek. You're trying it many times over. All I can say is that the search panel is doing its job. When they have the list ready, they will send it to RBI. RBI will go through its due diligence. The results will come. I'm still in the seat for at least till September 22nd. So I think it's inappropriate to have any other conversation. I don't have anything differently to tell you, and that's the honest truth.
Okay, we get it. You cannot answer with it's our job to ask you. But let's talk about results now, Mr. Srinivasan, because you have seen good asset quality this time. It is at multi-quarter levels which are good. Can you give us a sense of what is the guidance on asset quality going ahead and slippages as well? Because there as well, the bank has done well.
Yeah, I think let me just sort of zoom out and give you the headlines. It's strongest quarter in many counts. I did hear one of your colleagues talk about operationally weak. I thought it was operationally our strongest, and I'd like that to be on air and clarified. I think that probably some of the numbers are a little jumbled up because, as you probably know, we have taken the impact of pension as a one-time hit of 162 crores this quarter, consequent to the recent wage negotiations that were underway. So that's a one hit. If you back that off, it like I mentioned, it is an extremely strong quarter operationally. NIMs have expanded, NII has expanded, credit growth and deposit growth have been robust, and that's been our strength. And in particular to asset quality, we've sort of taken pride that our asset standards have been exemplar, and it continues to reflect that. This quarter in particular, the slippages were low, but even more happily, recovery upgrades were even higher. So there was really no provision required on the credit side. and hence the quarter on many counts, as you can see, has been very strong.
Understood that, sir. So give us a sense of the lending environment currently, and what is the loan growth guidance that you are working with for FY25?
Yeah, in the year that went by, we had guided for between 18 and 20. As we enter FY25, we are looking at reasonably optimistic opportunities. I do think we will be able to replicate in that zone between 18 and 20%, depending on how some of the things shape up. Our engine is working well across our businesses, whether it's corporate, commercial, or retail, agri, microfinance. All of them are tracking quite well. Our general belief is that without dramatically altering our risk appetite, credit growth is possible. It can be constrained only by the level of deposit accretion. Last year, thankfully, the deposit growth was strong. Yes, there were some gaps in terms of how we get the lower cost deposit growth going. That's been an industry phenomenon, but I do believe we are positioned for sustaining this kind of growth momentum into FY25 also. Notably, the year went by, our balance sheet crossed 3 lakh crores. Our overall business was about 4.62 lakh crores. So we see reasonable optimism for the year ahead too, the year we are in, FY25.
Okay, all right. Can you give us a sense of now what was the one-offs in recoveries or upgrades in this quarter, if there were any details on that?
No single ticket, Sonal. It's very organic, very structural, very regular, which is why I said an operationally very strong quarter. There was not like we were not helped by one single big ticket coming in and altering the narrative. It's been a very structural improvement in all the parameters. There's no.
So I just wanted to clarify once more. This time around, operational expenses are higher on a year-on-year basis. You did mention that this was a one-off phenomenon. So going ahead, do you expect it to moderate FY25 and next couple of quarters? How do you see that panning out?
What is the one-off in this, Vivek, is the 162 crores, which is the one-time impact of pension. Back that out, then it's in the organic growth. We've added 10% expansion in our footprint last year. We added about 140 branches, just crossed 1,500 branches in FY24. We do see a similar expansion in network in FY25 as well. So with that kind of run rate, our OPEX will grow at, back the 162 out, everything else is sort of organic growth.
Okay, all right. Mr. Srinivasan, the fee income has lagged loan growth for second quarter in a row. Can you give us a sense of what's happening here? What's the outlook going forward?
No, again, you have to see the lines. Everything is a little shift in line. Last quarter, we took a provision of 67 crores. If you see our provision, we have released that 67 and take the hit on the other income. So to that extent, again, that line is a intra-quarter shift. If you back that out, fee income has grown. So if you see core fee income has grown almost 24%.
So one more question. In terms of the co-branded partnership, what are the key concerns that the regulator had? Where are we in terms of making the changes required? And what could be the possible impact as far as the return ratios are concerned?
Yeah. Early April, when the new co-branding credit card circular came out, the regulators wanted us to look at that and ensure that all of that are fully implemented. We are in the process. We believe we will be able to go back to the regulators over the next 60 days and seek, present our case. We can't quite commit when the regulatory clearances will come, but it's safe to assume that in the next 3-4 months, we should be able to come back to delivering that kind of momentum. Over our full year financials, we are not, as you know, this is two important data points. Credit card as a share of our outstandings is still very small. Our credit card outstanding is slightly over 3,000 odd crores, and our total book is 210,000 crores. So the size of this is relatively modest. So the incremental aspirations that we have are quite elaborate. We're doing that organically. The dent that may be near term on account of the co-brand, we'll have to live through it for 2-3 quarters till we get the full clearance. So I would think you could expect H2 to be coming back on that count.
Very good to hear that, sir. So the next thing what we want to hear is FY25. Where do you see NIMs come about at? What will be the cost of funds? What are you penciling in? Are you taking into account any rate cuts from the RBI? And secondly, if there are rate cuts that do come in, do you expect any margin compression to come about?
Through last financial year, we had, somewhere in the 320, we navigated the rate environment reasonably well. As we go into FY25, we are working through both the business mix change, reinvigorating the momentum on current accounts, and reasonably preparing for potentially a rate cut sometime in the later part of calendar 24, early part of 25. So we have to work through that. But in short, I think our NIM guidance is on or around this number with some uptick as the business mix starts pivoting towards the relatively higher yield businesses. So we have to work this through. I think our FY25 numbers should be this and a few basis points higher.
Okay, all right. Mr. Srinivasan, we have spoken about business and the outlook is looking really good for the bank. You mentioned that you did not mention future initiatives, but in one of the press releases, it did indicate that future initiatives for the bank will be discussed as well. Just a last clarification before we let you go. Are you denying presence of KVS Manian on the list of internal and external candidates? If you can give us yes or no answer there.
First, I'm not part of the search panel. Second, I can tell you the search panel is just to complete their process. Third, when they complete the process, the report will go to RBI. Fourth, when that is completed, the regulator will do the due diligence. Fifth, they will send us the approval. We will flash it on the exchange immediately after the board takes note of that. So that is the process, Sonal.
Okay, all right. We tried, Mr. Srinivasan, but thank you so much for patiently taking all those questions and hope to be speaking to you very soon again. Well, with that, we'll do one thing. We'll take your leave on this edition of Midcap Radar with the news that the Federal Bank stock is high. It's up 4% in trade right now. And that was the commentary from the management as well. Take your leave, but MF Corner when we return.